Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. Market-wise, let's take a look at it out here. You have the Dow down 11, NASDAQ off 7, S&Ps are off 4.5. Gold contract up down $1.70, trading at $1,283.50 an ounce. Silver up a penny at $19.47 an ounce. Platinum up $3, $1,420 an ounce. Copper off a penny and a half at $3.19 a pound. Light sweet crude flat at $93.84 a barrel. Bonds, you can't hold them down, folks. 10-year up 7 ticks at 126.08. 30-year is almost up a point. It's up 22 ticks at 141.07. 10-year bottom line wants to go to 128. 30-year, 142. King dollar pulling back down 229 at 84.45. The euro up 28 at 131, and the yen is trading out there at 103.85. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We have a cash S&P out here that hit 2002. We got 2005 yesterday, 0.04. Your two benchmarks, folks. A benchmark, specifically, we're talking about either, making it or breaking it, meaning going higher or coming lower. A test with higher, lighter volume over the high. Your first benchmark on the cash S&P is 1994.76. You close underneath that Friday, that a failure on price and volume. I'm speculating the volume, but right now, as I walk you through this, the volume is probably going to be the lightest it has been all year for a weekly volume. So that is the first benchmark. The second benchmark is more important because if you close into the first one, which is 1994.76, it's not a big deal. You could basically go right to the high in a heartbeat. The second one is, though, 1991.39. The 1991.39 is the 24th of July. Because what we would have had thus far would be this, in a week, in a day. You would have gone to a higher high. My speculation is that we are going to have lighter volume on the weekly, and you would have failed. Because the way that the volume is coming in once again today, it's coming in as the lightest day of the year. Now, that happened. Thus far, Monday was it for a full day. Tuesday was closed. So Monday we did 493 million. Yesterday, 512. Right now, the way this is shaking out, you're at 304. So the way that's shaking out is that we'll probably do about 470, 480. It's hard to believe that we'll get 200 million coming in the last hour. We may. Yesterday when I started the show, we're at 350 and it came in at 512. Dow Industrials. We take a look at the Dow. What the Dow did out here yesterday, Dow double topped out here yesterday. It's going sideways, no big deal. The benchmark on the Dow is that high. That high is 17,151. We hit it yesterday, closed underneath it. NASDAQ Composite, we take a look at the composite. What do you have with the composite? She went to another high today. She's really flat. She's down $6, but realistically, yesterday you had a high of about 4,575.58, and today you did the same, 4,575, and you're at a 0.81. So the NASDAQ, in order to have a failure, has quite a way to go down. The composite would have to get into 4,533. Well, it's not a huge amount, but it is 33 points. We go look at the SPY, the SPY. What you have with the SPY is this. The SPY is at 210 and 200.10. Your high out there yesterday was 200.83. NASDAQ Composite, the NDX 100. What you have with the NDX 100, we are at the highs. We're at 99.44. You've done 11 million shares thus far. It's up on air. We'll see how the bubble gets whacked. Gold contract. We go take a look at the gold contract. What we have with gold is this. Price spread out here today went from 1280 to 1288. You are at 1283.30 right now. As long as you stay inside 1281.30, you're in the higher range. We would want to see more volume come in that contract, however. We go look at silver. SIZ for. So silver contract out here. We have with silver. Okay. Oh, this is interesting. There's a lot of contracts here in silver. This is encouraging. Okay. So silver's done 34,000 contracts today. And we don't have a lot of movement. But what you do have is this. When you start pushing... Yesterday we did 33,000 contracts. Today we did 35. I like how that's looking. Whenever you start pushing into higher price and you have an expansion of volume, bottom line, that's what it wants to do. And it's going to take quite a bit for silver to get back inside the higher range. We're at 1947. The higher range, folks, is 1994. Bonds, the ever-ready bunny. These bonds are a trip, no doubt. So, 10-year. Check this out. This is pretty intense, folks. We've done 2.1 million contracts in the 10-year today. We're at 126.07. That is a monster. That is number one saying that you're not only going to get up to the last high, which was generated on the August 15th. That was a spike high at 127.01. I think this thing's going to blow it away. It looks like it's another ABC structure. It is. This could be another ABC structure inside an ABC. Man, oh, man. That's powerful. 104.07. That's $3. Yeah, 128.19. So the A to B structure inside an ABC is almost 129. The 30-year bond. What do we have with the 30-year bond? 30-year bond has also done a huge amount of volume out here today. 565,000 contracts. Man, this is impressive. Okay, so we're at 141.06. The spike high of the 15th was 141.21. This is going to blow it away. 142 is on the way. But what you also have inside this bond market, folks, is that each and every expansion on the way up, you get wide price spread, you get accelerated volume. These bonds want a lot higher price. The yield on the 10-year right now is 2.361. What I expect you're going to see, this is going to be amazing. We're going to see probably 30-year mortgages at 3.9 next week, folks. That's pretty intense. King Dollar. Let's go take a look at King Dollar out here. King Dollar's backing down today. 19,000 contracts. We are at 82.45. And what I expect you to see here, King Dollar can back right down into the 81.95 once again. Why? Because it did everything it should have done. A to B equals C to D. You're backing down with lighter volume. King Dollar is going to take a little break here before it makes the run to that 85, which totally makes sense. Now, what's going to get intriguing is that I suspect King Dollar is going to give the metal market a chance to basically see if it can perform, see if it can get that wide price spread, accelerated volume. Some of the high volume stocks in a low volume market. Bank of America is down 17. You get Apple up $1.20. Facebook is off $1.32. We got Halliburton down $1.34. Smith & Wesson, I guess we're not going to be buying any more guns, so check out Smith & Wesson, folks. Smith & Wesson is down $1.78. It's only $11 stock to start with. But what you have, this is Smith & Wesson is a classic. If you want to see how you can get to higher highs with no volume, and then you go right back to the last time there's any volume. This is so classic, it's actually insane. We take a look at Smith & Wesson. High was generated in 2007, $22, crashed to 167. It does an expansion up to 2 months ago, 1728. Last time it had any volume, though, you can see it clear as a bell, was December of 2012. The high of December 2012 was $11.25. It's exactly what we're coming into right now. In fact, it hit, if you want to see something that's insane, we hit 11.26 today. Now, 11.25 is real price. Price, volume, all of the above. Now the question is, okay, where does it go from here? So we take this, and I'm going to put this back now on a 2-year weekly. And we take a look at a 2-year weekly. What's screaming out there is, guess what? You're screaming for 930 to 767. Why? Because you've broken the trend with conviction, wide price spread, accelerated volume. This has a long way to go down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials right now down 7. NASDAQ is off 6.5. S&Ps are off 4. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You have ExxonMobil down 45. You got Oxy off 8. Honeywell is down 13. Big Blue is down $1.39. You got 3M off 78. Walmart's up 31. United Technologies up 75. Let's get a Lou in Nashville. Hey, Lou, what's going on?
Hey, how you doing, Tom?
Doing great, man. You having a good day out there?
Not bad.
Cool,
nice
man.
Heat up in the Boston area.
Is it hot?
Yeah, it's nice and hot.
Oh, good.
Finally. I'm short the euro, and I'm just wondering if I should step out of it.
Yes. Yes, you should close it.
Okay, great.
Okay, so what you have is this. For folks that get my daily newsletter, we were long the dollar. We closed it yesterday because it did exactly what it should have done. I mean, it did an ABC structure on the way up, okay? So,
Yeah.
and when you take a look at the euro, what you have with the euro is that correlation. I suspect, you know, we're going to get a bounce. You know, there's no doubt. I mean, this thing went straight down. You know, we're talking about from 139 to 131. I'd close it, and then I can tell you on the euro, what I'd be looking for to open it back up is this. Okay, so let's go over this. So what it's done is this. It's finished the smaller ABC structure, right? And, you know, when they finish the structure, whether it's up or down, they like to do something other. So I suspect you're going to get a counter-trend bounce. Like with the euro, it can go to like 133, okay?
Right.
I would line that up with the dollar index specifically, because the index, what happens, folks, is that the dollar index, even though it's only 60% euro, what the difference is, because you can get the volume on the index, I suspect that the index is going to try to get back to like 8160, and as long as that's on light volume like it's doing right now, that'd be awesome, because then you can open up the short euro again and just put your stop. And that correlation, if in fact it gets back to that 8164, the correlation inside the euro would be ice there. It gets... Sorry about this. 1 second. Is that the correlation would be at... Yeah, the correlation would be about 133, 133.59 to 134. That's what it would be.
Okay. That's a good place to short again.
Exactly, because you can put the stop on the other side of it. And line it up with the index because of the fact what I just said, you got the volume characteristic there. Do you know what I'm saying? Because if the index comes back with too much volume, what you would do, folks, is that you wouldn't short the euro there. What you would do is that you would let the euro go back up to, which, you know, to like the 133, no, the 135. Because if it makes it through there, you know, 135 would be the number, man. And then that 135, what that correlation would be from top to bottom, well, that'd be cool. That 135 is right at 0.618 of the move down. Do you know what I mean? So.
Great. Yeah. Well,
cooking, brother.
thank you, bud.
Have a great one, man. Have a safe one. Now let's go over to our man, Mr. Darryl Martin. Don't forget, folks, each and every trading day, Darryl is an outstanding show here at TFNN, 1 to 2 Eastern Standard Time. And all the programming at TFNN, folks, we have live programming from 8 o'clock in the morning, 6 o'clock at night, right on your cell phone. You can get it on your browser, tfnn.mobi. If you haven't traded the Nadex platform yet, folks, come out, test drive it. It's an outstanding platform. Darryl's out there trading it each and every day, giving you great trading ideas. And as soon as you get that platform up, you can test drive his analyzer. It's an outstanding piece of software. Darryl Martin, what's going on?
Hey, man, how's it going?
It's going great, man. Hey, so how was the money show? What kind of action was out there?
Well, unfortunately, I left Saturday, so I didn't feel the action of the entire city moving on me. But
thank God. That's right.
Yeah.
That's right. Yeah, right.
I left, and, you know, it went off at 3:30 that morning. I missed it by like 12 or 13 hours. Yeah.
That's good, man. That's good.
But anyway, so, yeah, no, it was good. I went out there, and I was meeting with, you know, just some of the new exchanges that are looking at putting out some new products. Binary is becoming a bigger thing. They're going to be expanding out. And well, I also talked to, you know, some different companies out there.
Good.
And just saw some of the new stuff up and coming. And might even have some of those guys on our show.
Nice.
And just some of the owners of these, you know, stock companies that are launching out. And so that was fun, because that Money Show in San Francisco is it's a lot of stocks, you know, a lot of companies out there.
Sure.
And just seeing, you know, what it is they're doing, and, you know, I mean, there's one like called Voxox.
Yeah.
And they just got a big HP deal, and it's sort of a, you know, imagine Skype and Google Voice combined together.
Okay.
And get a number anywhere in the world. There's another company that actually has made a insert pill that basically helps people like lose all addiction, like cravings.
Okay.
So, like for alcoholics, and things like that, and, you know, drug addicts, and so it was pretty
interesting,
phenomenal what they're putting together. Just some, you know, some cool stuff,
right?
And stuff that, you know, to me, like, interests me. You know, I guess that's, so I'm checking that out, and
perfect.
Just, you know, knowing people that have had that, and, you know, seeing that there's things out there that are moving that forward, which is awesome.
No doubt. Now, listen, I heard you have a birthday coming up.
I do. Monday is my birthday. Yes, it is.
Baby.
Or Tuesday, actually, I guess.
That's a beautiful thing.
Yeah, it's always right around Labor Day, which I enjoyed growing up as a kid because, I always get that 3-day weekend for my birthday.
Well, happy birthday, man.
Appreciate that. Thank you.
Absolutely. So how old are you?
I am, I got to count now, right?
Come on.
No, I'm 37.
You're a young chicken. Man, oh, man. A young chicken. That's a beautiful thing.
Yeah.
Okay, so let's talk the markets. I got your analyzer up here, diagnostic trading analyzer. So talk to me about the markets. Talk to me about, it's been really cool because, you just heard the call coming in from Lou from Nashua. I mean, inside the Nadex platform, folks, you can trade a lot of things, okay? Bottom line is that the currencies are amazing, because currencies, number one, if they move against you, they can kill you. But inside the platform, of course, your trade is your stop, and these things are trending like a huge way, not in a small way.
Yeah, they're finally starting to wake up. Right?
Yeah,
So
exactly. No, exactly. Hey, you know what's amazing, too, is that, what's amazing, and I brought this up before, folks, is that, as Darryl said, they finally started to wake up, because they've been dead for a long time, and they were so dead that Merrill Lynch actually, one of the big brokers, closed their currency desk. And I remember when that happened, because Merrill Lynch, unfortunately, they had one of the best commodity desks out there, and they closed their desk in 2001, right before the commodity bull market started. And then, of course, they opened it back up. And this desk happened to be in London, folks, but it was an amazing desk, because I remember reading all their stuff all the time.
But and the thing is, even when it's flat, this is, I guess, what I personally love about trading on Nadex.
Yes.
Is you can trade in flat, traders thrive for volatility, right?
Right.
And so when it's moving, I'm going to be a spread trader.
Sure.
Okay, because the market is volatile.
Right.
But when it's not moving, which there's plenty of times in the day the currency's flat, right? So
yes.
You'll get your big hours that explode, but a lot of probably like 18 hours of the day there's nothing happening, right?
Yeah.
You can trade. Every hour now they got expirations like from 7 to 5 p.m. and on 4 different currencies.
Yes.
And so you can hop in there. And you can trade flat markets. You can basically collect premium. Take credit spread, Iron Condor, but it expires in an hour. Okay? And you could do that over on their binaries. And
yes.
Because a binary is a volatile instrument. Okay?
Right.
So it'll move. The instrument itself will move really fast. So the market may just be moving a few ticks, but you can see a binary go from like 10 to 80. Where you can see maybe you buy it at 70 and it goes to 90 with just a couple ticks movement or with just time passing. So, either way, you can trade volatility, whether it be volatility of the instrument on the binaries in Nadex or volatility of the market itself.
You just stay with us. Just stay with us. We got a quick break. We're coming right back. This is Darryl Martin, Tom O'Brien. You stay right there, folks. We're coming right back. Dow's up 1, Nasdaq's down 5, S&P's are off 2.5. Darryl and I are going to be right back with you, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands.
With a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get Big Mac up 42 cents, 3M's off 76. You get DuPont down 20. We're talking with our man, Mr. Darrell Martin, right now, and we are talking the Nadex platform specifically. And don't forget, you can listen to Darrell each and every trading day, 1 to 2 Eastern Standard Time. Then Darrell and I have a show on Friday mornings, 10 to 11 Eastern Standard Time. Right now, we happen to be looking at some of these currencies on his analyzer.
So anyway, but we were when we last left off, we were talking about the volatility.
Yes.
And sometimes you got volatility in the market, and sometimes you need an instrument that's volatile because you don't have a very volatile market.
Right.
And so with Nadex, you have both. You can use the spreads, which are not by nature themselves volatile. They're as volatile as the market is.
Sure.
And then, but when the market's not volatile, when it's just flying, it feels like you're watching paint dry, you know?
Yes.
Then you can go in and trade the binaries. And, you know, just trade, I mean, literally a few ticks, you can make a nice return, or you can just collect premium and do a nice credit spread type return. And, you know, just, it takes, you know, learning some more plays in your playbook.
That's right.
And,
so in this case, what you're saying specifically is that you're trading as the market maker, and there's no volatility, so basically you're basically banking on that, and that's what we haven't had for a bit, right? Because then there's not non-movement, but yet they're paying not a huge premium, but they're paying for non-movement. Well, they're paying for movement, and they get non-movement.
Exactly.
Right.
And so I'll go in there, and I'll take advantage of that. And, I sort of liken it to playing golf.
Yes.
You don't play with just one club in your bag.
Oh, that's for sure, man. Right.
You got your drivers, and, you got your irons, you got your putter, know. And that's sort of how trading is. You have those big trades, for when there's volatility.
Yeah.
You have those putters for when you're just collecting some premium. And you got some in-between stuff as well.
Right.
And that's what I was about. You can't, if you're trading, euro dollar and the market's doing nothing.
Right.
What are you going to do with euro dollar? You got one play.
Sure.
Buy or sell it. I guess you have two, right? But, you can go long, you can go short. But you can't collect money on time passing.
Right.
But when the market's moving, this morning we had a nice big run right there at 10 to 11 o'clock. The market was flying. But then, we have a couple hours of just nothing that's going on.
Sure.
So by going in and having a few different, clubs in the bag, you can take advantage of all those different environments in one place.
And right now, as Daryl is speaking, folks, that is the euro that he has up if you happen to be driving in your car right now. And what we did have, a bottom line is that it was interesting how the euro and the dollar reacted today. The dollar index went to a higher high and then basically gave it up. Euro went to a lower low and pulls back the other side. And that's a classic finish after an ABC structure on the way up or the way down. In this particular case, the dollar index finished an ABC structure on the way up. The euro finished one on the way down. And now we'll go from there. It's...
Yeah. What we're also, we're in holiday week, right?
Sure.
So all the big boys are out and taking vacations, and even I'm taking some vacation here in the next couple of days.
That's a beautiful thing.
They're out. So the volume it's down. It's lower than expectations. That's one of the things I plot is what should volume be, what is volume.
Right.
And we had one big hour of volume today, but even the other hours that are pretty flat, we're not even coming close to the expected volume that we normally have during those times.
Yeah, no doubt.
But next week, it starts picking back up because everybody starts getting back, and then all the big announcements come out. We're going to have Canadian interest rate, Aussie interest rate, pound interest rate, euro interest rate, NFP. So we got a lot of news that's going to drive the volatility.
Yes.
Wake things up, traders coming back, and,
And action, baby.
Yeah, there you go. So, it's nice collecting premium, but it's pretty boring. I like collecting the big moves, So both of them are good, and I use both because I don't just want to sit there and do nothing. But, I love it when we get those big moves. That's when we go and we start doing those magnet price trades, right?
Yes.
So, and that's the big trades that we love to do. So I can't wait to start popping those back on there again with you.
And
making this happen on our Friday show.
That's right. Each and every trading day, 1 to 2 Eastern Standard Time. You can listen to Daryl and myself. We have a show Friday mornings, 10 to 11. Well, listen, man, you have a great night, safe night. Look forward to the show tomorrow, and I look forward to a great birthday this weekend, man.
I appreciate it. Thank you.
Okay,
you have a great one, man.
Have a great one. Have a safe one. 877-927-6648. Intuitive Surgical. This is a personality stock beyond belief, folks. So Intuitive Surgical down $7 today. Not a big deal. But if you want to see a classic, this is absolutely a classic. Coming up to a gap. Filling the gap. Almost filling the gap. The gap that was left over of Intuitive Surgical was April 8th. The top of that gap, folks, is 484. It spiked up to 483 on the 24th of July. We did that. The first day you did it. Now, this is where you really want to wrap your head around what a swing point does, talking, walking, and squawking. So what happens with a gap is this. A gap can act, it does act as a swing point, by the way, okay? So if you have the art of time in the trade, my book, you know that that's in there in the swing point chapter. So you have to figure that 484.38 is a gap, and it's a swing point. So the correlation of how you act in that is really important. We had come down off that gap with 2.6 million. As we go back up, you had big volume at 2.8 million. We got to 438, but guess what? It didn't get to the gap, right? 484 is the gap. We get up to 483, volume dies in the vine. 1.2 and 1.2 is going against 2.8. Can't handle it. Okay? Pulls back slightly. Well, and I would say slightly on ISRG, that's $40, 10%. This is how the stock trades, though. Goes all the way back up yesterday, and we get to 480. Now, the real key is going to be here is this. Yesterday had 328,000 shares going into 1.2 million. I've seen this, and when the volume is that dramatically lighter, folks, get out of the way. Okay? So what's going to be intriguing here is, will ISRG go fill the gap? The gap is open to 390, which is $80 lower. Now, we put this on, that was on a 6-month daily. You put this on a weekly, and it's very clear what you have happening here, that this stock has been topping out since 2012. It hasn't, in fact, it hasn't been able to get those highs, meaning at the 500 highs since then. It came off in July of 2013. It goes down with vicious volume. It goes down $100, 20% in 1 month, 8 million shares. You came up, and you try to get into that with 7.3 million. That was on April of 2014. We came back up again with 6.5. So watch the correlation. 6.5 going into the 7.3, going into the 8.4. Can't handle it. So what does that set up? That sets up, it's going to go back down to the bottom of that now, which is 380. Okay, so that's in the weekly. Now we're going to do the monthly. So you pull up the monthly, and what do you have? You have a high volume high that has not been tested. Bingo, 354 wants to be tested. That is how this baby's not only set up, but the way that we're looking right now, it looks like 339. It's going to be hard to break down 339. You know, the reason being is that was the highs of 2007, 339. It stayed up there for almost a full year. Pulled back to $90. Oh my God. Went back up there, you know, to 330, 393 again, gave it up again. But that's going to be the number you're going to look for. If you like trading this, which I know some of the Tigers and Tigresses do, just sit there and wait for that to get down to the bottom. See if it rejects it on lighter volume. Rejects it on lighter volume, you get yourself a heck of a trading range there. That is one monster trading range. There's no two ways about that. We go over and take a look at Big Blue, IBM. What we've had with Big Blue, that has continual lower highs. It doesn't have lower lows yet, but what we did out here today, you got into ICE, gave it up. We're at 192 right now, and the way this baby is set up is that she's been topping out, and she's been topping out, folks, since October of 2011. So it's pretty amazing. The longer that you go sideways, this is, you know, you can actually, if you put a monthly chart up, folks, on IBM, you can see that how it topped out from January of 2012 going over to September of 2013. Then you can see the next layer down, how volume is expanding as it's getting into lower lows. IBM's got huge problems. I mean, you know, IBM wants to test 157. 157 is game on IBM, which is not only down there, it's down there quite a bit. Bonds, that bond market, well, folks, is just amazing. There's no two ways about it. I mean, I'm in the camp that bonds are going to be basically going much higher, but every time that I actually even see it, it's like amazing. The move out here today, and this is what you can get out of this too. You know, we're talking about slow volume in the equity markets. Guess what? Things that want to go higher, folks, have volume. Bonds have volume. The whole world can be on vacation, but guess what? The people that are buying bonds are not on vacation. Money is at work 24 hours a day. They're buying the bond market, and they're buying in an extraordinary way. We are at 141.06 right now, and 143.11 is ICE. But we're coming up to that, and we're coming up to that with conviction. That's telling me that it's going to go to the highs. Probably, well, we'll see whether I take out the highs, but I suspect we're going to get to those highs. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You have the Dow Industrials right now up 9, Nasdaq's down 2.5, S&Ps are off $1.50. And if you just want to see the type of rates across the world, folks, this is pretty amazing. So, of course, most of the time we talk about our 10-year and our 30-year. And the 10-year right now is at 2.359, and the 30-year right now is at 3.1. Okay? But check this out. This is pretty amazing. If we get down to a 2-year, what happened today in Germany is that in Germany, they were paying the government to take their money. It went negative. Yeah, you heard that right. It went negative, folks, okay? So if you want to own a 2-year in Germany, you got to pay them, okay? That's, like, amazing. So our 2-year is yielding 0.5%, 0.51. France is, oh my God, is 19 ticks, 19 100ths. Pretty amazing. It's really amazing, actually. So isn't, let's see, so is Spain. I mean, it's just amazing. So what you have there is that you think many times, what is the catalyst? The catalyst has to do with the world, where are the rates in the world versus where our rates are. And when you look at that context, when we look at how these rates are shaken out, this is pretty intense because our rates are high in the context of where else you're going to go put your bread. And they're particularly high in the aspect of our dollar is trending up, the euro is trending down. Forget the peso. The peso is, well, depending, you know, Argentina is really dead meat. And if you go to Asia, it's the same thing there. The rates in Asia are incredibly low, number one. And like, so Japan's 0.5%. Australia's 3.3. New Zealand's 4.1. South Korea's 3. So when you start tying those together, you can see, number one, the aspect of where our rates are and where I suspect they want to go. Because it's the whole bundle of money chasing yield. What just came across the tape, now this is going to get really interesting, and what it is this, is that the amount of, let me pull this up, I'll pull up, the amount of collateralized bonds that they push out into the marketplace, the S&P, Standard & Poor's, this is, just decided to change the way that they look at these bonds, pushing them out. The reason being is that they haven't been getting enough business as they're pushing, as a rating agencies. And if you remember anything about, 2007, what that was all about, no one has basically gone into the can or even got fined at this particular point yet, is that the rating agencies were rating everything like an investment grade when in fact they weren't. Standard & Poor was notorious for it. They just changed this morning. Now check this out. This is amazing, actually. That was a market that once it imploded, it went down to nothing, zero. And what this article is about, which should just come out, it looks that market is going to be a $100 billion market this year. That surpasses the market that we had in 2007 that imploded, and it was $70 billion. And what the article is about is that the underwriting standards are getting easier, and they're going to take more tranches from the bonds and claim that they're better than they are. And what's that all about? What that's all about, folks, is not, well, you could be saying that it's you and I buying them too, but I don't think that's the case. What is the case, though, is this, is that states, unions, trust, inside their prospectus, they only can buy a certain type of bond, whether it's a treasury, whether it's a mortgage-backed security, whatever that is. So what these rating agencies have to do in order to sell huge amounts of them is they have to craft the rating to fit the prospectus. And that's what we have happening once again, which is just absolutely amazing. I'm sorry about that. Let's go. Is Ron, you got Ron in Denver. Ron, you there?
Yes. Thank you, Tom.
Oh, thanks, man. I'm sorry. I'm sorry. Thanks for holding, man. Appreciate it.
That's all right. I looked out. I bought some calls on Sanderson Farms yesterday. I didn't get out yet today, and I don't know if I should get out now or I'm going to try and hold for tomorrow for one more day.
Okay,
it's
so
SAFM.
Let's take a look. They process, market, distribute fresh and frozen chicken. The low's 59, the high's 103. Okay, so what I would do is this. When you're in the option market, I suspect if you bought them yesterday, the calls have already doubled, right?
Yes.
Okay, so sell half of them.
Okay.
And get your principal back. Because
I'll do that.
This is an equity that does want to go lower, you know? I mean,
okay.
This looks like this is actually a confirmed ABC down. Your 8-point is 101. Your B is 87, 13, 14 bucks, 97, 87, it's 83 bucks is your price point.
Okay. I'll sell. I'm looking at, what do you think of CMG after being down 7 1/4 today?
Let's take a look at it. What I would do, I would just wait on CMG. If you want to get your head wrapped around that, let it fill the gap. It'll fill the gap, man. I know that's sick, but I wouldn't jump right into that right now. That gap, there's a gap in CMG, folks, from 582 up to 649. That's a $60 gap. That will get filled.
Okay. Thank you, Tom.
Okay, man. Have a great one, man. Have a safe one.
Oh, and by the way, you mentioned Intuit Surgical.
Yeah.
Shows you how the fundamentals don't mean anything. Today they got FDA approval on a new surgical system. It's called Firefly. It's supposed to help surgeons locate leakage of blood. You know, it's supposed to really help the surgeons. I don't know. And yet, stock's down 7.
Yeah, that's, you know, Intuitive Surgical is just well, not just. I mean, they make plenty of money, and the robotics folks cost a fortune. And there's pros and cons. Some doctors like them, some say they don't, okay? But bottom line is it's a $2.1 billion company. And my take is that, you know, it's in a huge trading range, and I don't see it going back to highs at all. But, you know, if you're going to trade it, buy the calls at 357. You're at 470 right now. Okay, man. Have a great one. Have a safe one. Yes, that sounds insane, folks. $120 down, but Intuitive Surgical can sneeze and go $120 down. You stay right there, folks. We'll be coming right back. Dow Industrials are up 10. NASDAQ down 2. S&Ps are off $1.50. We're going to break back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our belief cards. This is by Beatrice Potter. Believe there is a great power silently working for all things. Believe there's a great power silently working all things for good. Behave yourself and never mind the rest. Market-wise, let's take a look at it out here. We had the Dow Industrials up 15, NASDAQ down 1, S&P's off $1.50. All of those, folks. If we go take a look at the S&P right here. Cash S&P, we're at 2,000. What are the benchmarks? Your benchmark is 1994.76. at the Friday. If we close over that, it's going to go higher. It doesn't matter what the volume is. Close under it, it'll be a failure on price and volume. The larger benchmark is 1984.60. That number is the high that was generated on the 25th of September. No, September? No, sorry about that. of July. Okay, a little ahead of myself there. So, market volume-wise, what do you have? This is going to be one of the lowest weeks in the marketplace. Monday, we did 493 million. Yesterday did 512. Today we did 497. You go take a look at the SPY, the SPY. What we did with the SPY is this. 44 million shares. Yesterday you did 47. Day before you did 76. Bottom line, you should be banging out about 100 million shares up at these levels. NASDAQ composite. You had a flat composite out here. She's hanging up there. She did 1.36 billion. Composite, same type of numbers, meaning very light volume on the dailies and on the weeklies. Because what you got to remember, Friday, if you thought today was anemic, Monday was anemic, Friday's going to be like, forget it, folks. People are going to be on. We are going to be here. We're going to be here 10 live hours on Friday. Market participants, I suspect, though, what you're going to have coming into the Labor Day weekend is that they're going to be out of there by 11 o'clock in the morning. Why? It's the last weekend, not the last weekend that you can have a good time, but it's certainly the last weekend of the summer. Gold contract. What do we have with gold? Gold held the swing point that we're looking at. That swing point, folks, is 1281.30. Would have liked to see a little more juice in the gold market out here today. We did 63,000 contracts. It's not that great. What was nice, however, though, was silver. Silver didn't get the price movement, but what it did do, folks, which I like, is that it's pushing with volume. Yesterday we had 31,000 contracts in silver, couldn't hold price. Today we get 35,000 contracts. You start pushing with price, that baby wants to go. Silver has to get back inside $19.94 in order to get in a higher trading range. Bonds, we know what bonds are doing. Bonds are going to the moon. And they're going to the moon, folks, with conviction. I mean big conviction. The 10-year was up 6 ticks at 126.07. Did more than 2 million contracts, more than 2 million. The 30-year is up 21 ticks. I believe that did like 560,000 contracts, which also is a monster number. 600,000, 608,000. They're both huge. What that has to do with is demand, number one. It has to do with rates across the world, and rates across the world just continue to drop like a stone, folks. I mean, in a huge way. The real question is that you have to ask yourself, the way that they're dropping is deflation basically out here, again, across the whole world, not just in the United States. It certainly hasn't been there in the food market. We do go over to look at some of these commodities, though. Most of these commodities are going south. One of the biggest ones that's going to help all of us is the oil market. You go look at unleaded gas. That was down to another 2 pennies out here today. It looks like it's a very large ABC structure on the way down. Wholesale unleaded, folks, is at $274.35 right now. And it looks that this baby could get down to $250. $250 is going to bring unleaded gas, depending where you live. Right now, unleaded gas in Pinellas County in Florida is running about $3.05. That would bring that baby down to probably $265, which would just be, no, not $265, $287 or something. You know, so it's a big number. There's no doubt about that. King Dollar. What is King Dollar doing? King Dollar is doing a counter trend bounce, folks, and it finished its ABC structure on the way up. Went to a higher high today and then gave it up. With lighter volume, by the way. So King Dollar's at 82.49. I expect that's going to be pulling down to this 81.64 area. We go over, we take a look at some of the numbers after the close out here. Workday, WDAY, and Workday, folks. This is cloud applications. It's pretty wild, some of these different names, right? Workday, you think it's a working site or something. Bottom line, it closed at $90.30. That is trading right now at $91.51. And $91.51 is not going to help this equity one bit. Why? Because the equity's gone straight down from 116. Your swing point that it's going after is 92.15. What it has is a high volume low, however, at $64. And bring this back. This is a new IPO that's out here. Yeah, this is, first off, this is going to go test the low of 62.21. So we'll see where that shakes out. Our man, Mr. Dave White, is just telling me that good old JetBlue has just announced a sale 20% off for domestic travel. That is so cool, because what has happened, folks, is this. When you look at these airlines, the airlines themselves, you know, JBLU, let's say, let's go look at this. The airlines themselves, so that's at 1238, and it's not that even JetBlue. Actually, okay, so it's at where it was. It's JetBlue hit a low of $3. Right now, it's where it was trading at 2006. Bottom line, the airlines, to me, have been getting away with murder, meaning that the amount of bread that they've been charging, I suspect you're going to get a pushback on it. And why? Because I can tell you, if you're going on business, like I had to go up to Boston on business for a couple of times, and oh my God, it was sick. So picture this: Florida, Tampa to Florida, folks. Normally, you know, even on business, right? Meaning running, you got to get there quickly. $350, $450, right? Last two times I had to go up there in the last couple of months, each one of them were $750 to $850 for the flight. That was like insanity. Bottom line, you can get to California just as cheap. But what the airlines have managed to do, and they had a full flight, by the way, okay? What they have managed to do, no doubt, is squeeze prices. Why? Because right across there's no competition. That's what it really comes down to. So we'll see if, in fact, you're going to get, I suspect what's going to happen is that this winter is going to be probably incredible trying to get to Florida. So if you're going to get to Florida, folks, or you want to go somewhere, you know, go out there and start looking at that right now, because the fares went up very, very quickly. And the second trip that I actually took to Boston, I believe that I actually had at least a week, too. I didn't have a month. It's not like I had a month. You know, but bottom line is that we'll see whether there's any more startups that are out there. But with those types of prices, I expect that you are going to have some startups. If you saw that story, there was a story about United Airlines, a couple passengers on United over the weekend. And what it was is that there's some kind of a device that you put in the back of someone else's chair, and they can't basically push the chair back, a kickstarter, a knee starter or something. Bottom line is that the pilot had to divert the plane, bring the plane down, because even though on United they're illegal to put on, the guy wouldn't take it off. Lady threw a cup of water at him, and you know, as we start getting, you kick them both off. Yeah, it's pretty amazing that they couldn't control that on the air, but guess not. You stay right there, folks. We'll come right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of TFNN, folks, don't forget, we start programming at 8 o'clock Eastern Standard Time. We go to 6 in the afternoon. Our man, Mr. John Logan, kicks us off every morning. You can get all our programming right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, just put TFNN.com on it. You'll see the TV on the top right-hand side. And John, folks, okay, not only has an outstanding show, he has an outstanding piece of software that he uses each and every day. It's the TAS Market Profile. And what's so cool is that this setup is basically, you're looking at it like, what side do you want to be on? And if you want to stay on the other side of this, well, God bless you, okay? But you're going to have some problems. Because the bottom line is that it's clear, it's concise, and in fact, as the market closed out here, Williams-Sonoma just come out with numbers, folks. So Williams-Sonoma closed at 74.89. If you take a look at these profiles on Williams-Sonoma, you can see that, hey, listen, man, you better be selling Williams-Sonoma. There's a problem here. Guess what? Williams-Sonoma right now is trading out at 66.57. Don't forget, you can listen to John each and every trading day, 8 a.m. You can see one of the videos that he puts up on the right-hand side of TFNN. But guess what? You can listen to the whole show and see a lot more than just one video. John Logan, what's going on?
Hey, Tom. Good to be back with you. How are you?
I'm doing great, man. You having a good day out there?
Yeah, been taking the time with the low volatility and nobody at the desks in the institutional world to reflect on a couple of fundamentals, actually.
Oh, okay.
Yeah, and like a lot of people forget a lot of things. I mean, we've talked about, this market going straight up and,
yes,
whether it makes sense or not. I mean, take it for what it's worth. We're traders and
right.
Can't overthink the market. But, I was on the show this morning, we talked slightly about, even though this market's making new highs, you don't feel that so-called irrational exuberance, I mean, like, people aren't super mega excited, like as in market top type situations usually are, you know?
Well, it's probably, you know, it's interesting about that. You know, John, I was just talking about the airlines, right? And what's amazing is that as I was talking about that, folks, Bloomberg just put an article up. And so check this out. You know, don't talk about record stock prices to owners of these shares. And what it's about, here's a fun quirk about math that you probably already know. Of course, our listeners definitely know, but it's worth repeating. If the price of something drops 50%, you have to rise 100% to get back to where you started from, right?
Exactly.
So listen to this. This is crazy. So they talk about the airline ARCA index, right, which went down 93.9%, folks. Since I'm talking about since 99. Well, guess what? Even though the airlines are up so much, that requires a 1,600% rally to get back to the highs.
Yeah.
That's the first one. Now, and this is where the, you know, buy and hold forever comes into it, folks. The banking index, that plunged 85% since 2007. It's up big, but guess what? It has to go up another 286% to get to the highs. The home building index, that went down 60, let's see, the financials. The financials, 84 to financials. That needs another 62%. You know, and the home builders need another 55%. No, the home builders need 124% to get back where they were. So it is intriguing, you know.
Yeah, I mean, it's just wild. Like, you know, some of the things that we used to key off of, I mean, that's really not there right now, in my opinion. And that's kind of something, you know, I'm just kind of waiting for the VIX to just plummet to basically, you remember when the VIX was 5?
I do. I do.
And that was, you know, like we were looking at our technicals on it, and, you know, it was time to buy the VIX. We caught a couple of bounces with it. But, I mean, you know, we still don't have, in my opinion, and again, we're just talking fundamentals because it's a light week this week. You know, I don't see people out there like, you know, really gung-ho about diving into the markets. And I looked at some numbers. I mean, the money market funds ratio-wise, you know, they're still a little bit, you know, not overextended on the market, you know, and I mean, market versus money market funds, or equities held versus money market funds. And, you know, it's just this thing, you know, it could go a little bit higher. I mean, we're waiting for some new information to appear. As you know, we always kind of wait for new profiles to appear, what we do. And, you know, those haven't appeared lately. But, you know, also, you mentioned something about IBM. I mean, I know you've kind of been you know, a little slanted towards the downside. I mean, me too. It's one, you know, another thing too is like, it's almost like there's more cash in fewer hands as far as big stocks go. And I was kind of looking at that this weekend. Yeah. This past weekend. And, you know, I mean, if these heavily weighted stocks ever start rolling over a little bit, and IBM's, I think, almost about 8% of the Dow. It is. And, you know, and if these stocks ever start rolling over, you got to pay attention seriously to those heavily weighted stocks with all the cash, like the Apples of the world, the Citigroups of the world, the Microsofts of the world. You know, and by the way, the last 3 AAA rated stocks are Microsoft, XOM, and Exxon and Johnson & Johnson. You know, I mean, like, so it's not like these stocks, there's a lot of stocks with a lot of cash with a very high rating, if you know what I mean. I do. Yeah, listen, there's no doubt, man. Yeah, so, I mean, you know, I guess the theme of what I'm trying to say today is pay attention to the leaders. We're looking at that market breadth thing that I know you've been looking at. Yes. And, you know, things are kind of cooperating right now. We don't see any anomalies going on, no divergences. But if some of those market leaders, which we're putting in a little key that you can kind of click on where you can actually weight percentage-wise all those instruments in the S&P 500 to actually get even a different view. You know, if those heavily weighted stocks, you got to pay attention to them because the index value basically is running off the horses that are winning the race right now. No, there's no doubt. And, you know, when you're talking to Dow Industrials, folks, okay, it's dramatic, okay? So, you know, inside that Dow, you know, like today, okay, so, you know, it's up $15. Bottom line is that United Health had, you know, that was the biggest point gainer. That was 8 points inside it. The rest of them were 2 or 3. Taken away from it was, even though IBM was only down 74 cents, it was taken away 4.7 points. You know, 3M was 4.3. United Technologies 3.7. And I can tell you, you know, a little piece of software picked up 3M and United Technologies in a huge way. I'm telling you, I love that thing.
I do too.
You know, we're gonna kind of re-roll that out, as you know. We're still kind of
right. No, I'm with you. We're teasing you out here, folks.
You know something else too that nobody talks about anymore. You remember the last time there was a big national debt kind of conversation was around $12 trillion?
Yes.
That thing's 50% worse now, and that's like it seems like it's in less than a year. You know, and Treasury's going through the roof. There's a lot of disconnects going on, in my opinion. And,
you know what I'm trying to figure out right now? Particularly, I mean, I've been bullish on bonds for a long time, right?
And you should be.
Yeah, and the thing that is worrying me right now, and I can tell you this has really just started the last couple of days, too, folks. I'm saying to myself, you know, I was always going back and forth, inflation, deflation, because we've been in the gold market for so long.
Yeah.
But I'm saying, man, I'm looking across the world. I mean, Germany went into a negative.
That's crazy.
The 2-year notes in Germany, folks, you got to pay Germany to get them today. But I'm not. This is you're not hearing things, folks. You got to pay them. They didn't pay you. Okay.
That's bizarro world.
It's bizarro. And then I'm looking at myself. Are we in a world deflationary day? And that, folks, we don't want to be in that. Trust me, we don't want to be in a deflationary world. It's danger beyond belief, man.
Yep.
Not good. Listen, folks, tomorrow morning, I'm at Mr. John Logan right here at TFNN, right on your cell phone. John, you have a great night, safe night. We look forward to the show tomorrow.
Thanks, Tom. Awesome.
Awesome. Have a great one. Have a safe one. You stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had, GE was up 12 cents. You had United Health up $1.26. Chevron was up 39. We go over to, let's go over to GE first. General Electric, folks, bottom line, that is at 26.13. I expect what you're going to see there is that she's going to be making her way down to the high volume low out there of 24.75. Now, we were just talking with John. I mentioned United Technologies. United Technologies, folks, UTX. This is an equity. Now, it's down 59 cents today. Not that that's a big number. What you do have is this, though. It's clear that it had been topping out since January of this year. It comes off those highs, and, when we say topping out, it was traded at 120. So now at 109. It had already made a high volume low at 103. The danger here is that this is an ABC structure on the way down. It looks to me like it is. It couldn't hold price out here today. Your A point on this is 120. Your B is 103. So you can see, in that context, it's a very large ABC structure on the way down. You're talking $17, which would bring that into the 97 area. Well, actually, 120. Oh, $17. No, it's a lot further than that. That's, 93. 93 would be the number there. And 93 basically would wipe out all the gains from June of 2013. That is on your weekly basis. On a monthly basis, what is out there screaming is $83. So we'll see how that does shake out. But if you want to see how price, volume, how they do end up going down into those levels, take a look at Smith & Wesson out here today. What Smith & Wesson did, she was down $1.73. Came down with volume and actually came down to the last time she had volume on the way back up. We had just talked about Williams-Sonoma. So Williams-Sonoma closed out here today at $74.89. Williams-Sonoma, of course, the huge retail cooking outlet, serving equipment, home furnishings, all the above. They also own Pottery Barn Kids, Pottery Barn Teen. The low is 51, the high 75. That 75, folks, was generated, I think, today. Oh, these poor people, they got smoked. Okay, so this is going to be a problem for a lot of people out here. So picture this. It hit the high today, 75.68. Now, it did not hit the high with volume, folks, okay? The bottom line is that this has been going up on lighter volume, and when you see how it's been going up on lighter volume, I'm going to just show you this and shake this out. So the last time it had any volume on the way up was $65. That was March 14th. What do you think it is? $65. $10 down, and let's see what they have to say. So they see third quarter. The estimate was 66 cents. Oh, it's on the. Let me forget the third quarter. Let me get it. Okay, Williams-Sonoma announced operating results for second quarter fiscal ending August 3rd, 2014. Second quarter net revenue grew 5.8% to $1.03 billion versus $892 billion. That does put growth up 5.7%. The operating income was 9.3%. Diluted earnings grew 8.3%. This is a comment from the president. We are pleased to have delivered another quarter of solid performance, again demonstrating, of course, they're going to say it's great. They don't, whatever it is, the bottom line is that, okay, so here's the breakdown per store. This is a breakdown from second quarter of 2013 to second quarter of 2014. In Pottery Barn, it had grown 9.9% in 2013. In fourth quarter, no, in 2014, 4.4%. Williams-Sonoma itself basically decreased in 2013 and increased by 3.4% in 2014. Pottery Barn Children, in 2013, it was up 8.2. It was only up 5.6. West Elm, that must be something new. That last year was 16.5. This year it's 16.7. And Teen on 2013 was 16.3, and now it's -1. The thing's incredible, actually, when you look at this and break this down. What you have, it's not actually the Williams-Sonoma itself, which is, you know, the dishes and all this. It's Pottery Barn, which is down dramatically, which would be like furniture, right? And clothing. The kids' clothing is down dramatically. I mean, you know, and so when you take all those together, you can see why the market is punishing right now, because it was 8.4 growth in 2013, second quarter, 5.7 this quarter. So bottom line is that the retailers themselves are having a tough time. And the real question is the tough time because so many folks are buying something online, or is the tough time that they're just not buying them? Let me give you a scenario here. This is pretty cool. Listen to this. Bridget's daughter Ellie the other night was shopping, and I forgot which store they were in, but check this out. So there was a dress that was $100 in the store. They didn't have her size. So what ended up happening is that she's 15. She went online on a phone, turned around and saw that the dress was online, folks. Exact same store for $50. So there's probably a mispricing that's going on simultaneously, and I suspect what you actually have is that the online aspect of clothing in particular is hammering stores on a continual basis. And when you can save that much money, it's dramatic, though. That's unbelievable. That's like as cool as you can get, right? Okay, let's go over to the financials and the energy. We'll start with the XLF. The financials out here today. The XLF, another high, 23.43, no juice. So the benchmark on the XLF goes like this. 23.24 is one failure. The larger failure will be 23.06. We'll see whether it can get down into those levels. The energy market, the XLE, what you have with the XLE is that that's a flat market out here today. The XLE looks to me like it's still an ABC structure on the way down. If we go over to Halliburton, we take a look at Halliburton. Halliburton today came down on monster volume. Halliburton's probably going to be the first ABC structure on the way down that's confirmed. Your 8-point on Halliburton, 74. Your B is 66. So you get $8. Your C is 69. Halliburton had a huge expansion of volume. And this one's really something that you want to watch. Why? Because you had an expansion of volume, 15 million shares, and you have not hit the swing point. So when you're banging, I talked many times, if you're pushing on swings on the way up with volume, they want to break out. You're pushing on the way down, they want to go downtown. So just keep your eye on Halliburton to see exactly which way it goes. We did 15 million shares out here today versus 9.4 at the B point, which is 66.77. You start doing that kind of volume, folks, someone is pushing huge, not small, huge amounts of stock out. In fact, let's see who this is pretty wild. So simultaneously as that's happening, inside sales. And this one's you always want to pay attention to the treasurers, folks, and the CFOs. Timothy McKeon, officer and treasurer of Halliburton, has filed to sell 3,000 shares of Halliburton through Fidelity. That is as of the 25th. That was filed the 25th. Okay, so that was filed 2 days ago. Once it's filed, it can be done all the way. Okay, let's see. This might be through. Okay, a 10B5-1 plan is a written prearranged schedule of insider trades crafted by having such a plan. The insider can continue planned transactions even if they come with the possession of material non-public information. Okay, so that's a planned sale, which, by the way, what happens with those planned sales, folks, you don't want to pay attention to them. You'd have to go all the way back and really kind of look at that. So the other sale, which is also another vice president with 3,000 shares, is also a planned sale. But what we can do, when you look at the planned sales, what I do is this, is that then go into management. Okay, so if you see planned sales, then go into management. Then you want to turn around and bring up the name. And what you're doing there is that you just want to see how many shares they have. You say, okay, you have that many shares. And he doesn't have that many shares. This gets interesting. 60. Yeah, he's selling off. You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had Boeing was down 40 cents. You had Caterpillar up 49. DuPont was down 23. We had International Paper up 33. J.P. Morgan Chase was off 15. Hewlett Packard was up 33. Microsoft was down 13. Amazon was up $1.35. Let's go over to Amazon. Take a look at Amazon. Amazon bought Twitch yesterday, AMZN, for about $1 billion. And Amazon, folks, right now is at $343.18. It's right in the middle of the gap. Amazon had gapped down from $364 to $314. That was on the 25th of July. And Amazon is way off its highs. Now, the key that you want to get with Amazon is this. Amazon, folks, is the first equity off the lows in 2007, and by 2 or 3 months also. So as we go forward, it's going to be interesting if we're talking 3 or 4 months from now, if, in fact, Amazon was the first one off its highs also, because Amazon made its high in January. And, of course, we're in August going into September. So you've had 5 months down with juice, by the way, with some good volume. And the way Amazon is set up, I mean, this thing can really get a lot lower. So it's going to be intriguing watching how Amazon is going to trade, because the statistic on it also goes like this. You're coming up to the December holiday, right? Everyone's going to be buying gifts. Most times, the statistic, and I heard this on CNBC today, is that Amazon happens to be one of these equities that like to run higher this time of the year. So that's going to be something that you want to keep your eye on. As John Logan was saying, some of these, you can get a lot of information out of them in a counterintuitive way, meaning Amazon wants to go lower, has already showed itself that it wants to go lower, wide price spread, accelerated volume on the way down, has a history of coming higher, into Christmas holiday. If that can't make it, guess what? Well, many of the others won't make it. Of course, we know Apple, they're doing everything that they can to basically, news-wise this is, to basically say Apple's going to have great devices out, new devices out, all of the above. We'll find out if, in fact, that can happen, and will Apple stay over the high? So the benchmark on Apple's at all-time highs right now. Got to remember, it did a 7-point stock split, 102.13. Your benchmark is 100.72. That came up there on anemic volume. It was 2.3 billion. Gave up the ghost and went down to $55. So you almost had my God, that was almost a 50% retracement. That's pretty intense. Yeah, because if it was at 700, that would have went to 360, 370. We went from 100 down to 55. That's pretty intense. Anyway, you made it all the way back. So if you stayed in, guess what? You're back at highs. Now, last month you did 1 billion shares. The 1 billion is going into 2.3. We're going to be at the end of this month, and right now the way this is set up is that, let's see, we are at 800, and what do we get? We only get 2 more trading days. Bottom line, that says that we're going to do 900 million versus 1 billion last year, and that's if Apple does the same amount of shares it did today, 46 million. And your benchmark is 2.3 billion. That benchmark, however, folks, was a benchmark that gave it up to the tune of about 45%. So that's a test of a benchmark that didn't have volume, number one, came down on volume. We'll see if, in fact, that holds. At the end of this week, what you want to wrap your head around as you're coming into the weekend and coming basically back from Labor Day is the higher swing points. Have they made it on the daily, weekly, monthly? What's so cool about the way this holiday is shaping up, folks, is that we know on the dailies they haven't had volume. They have holding price, many of them, though. So if you have higher price, even on lighter volume, you can go higher. On the weeklies, we also know we have lighter volume now. Same as applicable there. If you can hold price, you can go higher. What we're going to have by Friday is you're going to have it all lined up. You have the weekly, daily, and the monthly. And you want to line it up the exact same way. So what does happen is that the close coming into this Friday is important for bulls and for bears, and we'll see where that baby shakes out. The S&P doesn't have to give up much to basically have a fair, well, when I say it doesn't have to give up much, it has to give up 9 points, which in this market, 9 points to give up is quite a bit. That's for the larger give up, because the number, if you're a bear, what you want to see is you want to see a close below 1991.39. What that would do is get you in the lower range, and that would set up a 1904 level, which, is basically the low that was established out there in August. If we do get a close under the 1994, which would be a failure, it's just not as large a failure. So you're still not in the lower trading range. You could bounce around a little. You could go test the high again. Then I suspect you'll get down there. But the larger benchmark is at 1991. That is on the cash S&P. The cash S&P, folks, is a thing you want to keep your eye on. The reason being is that the cash S&P does not trade. All 500 stocks have to be open in the marketplace. They have to price themselves out, and they have to trade, versus the futures. And what happens with the futures, they're great to trade, but what ends up happening is that the market operators, the large banks, can push the futures around. Where can they push the cash S&P around? Yes, they could, but it takes a lot more money to push the cash S&P around, because inside the S&P, of course, you get 500 stocks. Some are weighted more than others, but they'd have to be buying all those stocks simultaneously in order to basically move that cash S&P, versus when you're dealing with the futures, what ends up happening is that the operators in the future market, like a high in the futures is 2,000.50 today. If we look at that, the actual high came in yesterday, and on the future, that is 2,002.75. What happens there is that the banking structure, an operator, a fund, you could buy or sell 200 to 400 contracts, and that's, I'm talking about the large contracts, and push that around. You know, so there's a difference there, and that's why we look at the cash S&P. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Don't forget, it's Wednesday. Allie and I are going to come back with Mindful Living, 6 to 7 Eastern Standard Time, right here at TFNN.com. Have a great one, folks. Have a safe one. Go get 'em.